Hey guys, it's that Dividend guy coming at you with an awesome update. So, um, at the beginning of this week, the banks released uh, some really good news. So, if you're a big bank holder, this article is definitely for you. So, the headline is Morgan Stanley and Wells Fargo double their dividends and what it means for their stocks. So we're going to go over every major bank. I don't actually own any banks, but to be completely honest with you guys, right now Morgan Stanley seems like a really good buy for me. So I'm going to look deeper into their financials and see if they have a spot in my portfolio. But we're going to jump in. Morgan Stanley doubled its dividend, leading a parade of big banks that lifted their quarterly dividends on Monday for the first time in 2 years after clearing the Federal Reserve stress tests last week. Morgan Stanley, ticker symbol MS, which has benefited during the past year from its strength in trading and investment banking, hoisted its dividend to 70 cents from 35 cents, exceeding the optimistic estimate of 55 cents from Barclays analyst Jason Goldberg. Morgan Stanley, whose shares fell 70 cents on Monday before the announcement to 87.80, will yield 3.2%. In pre-market trading Tuesday, Morgan Stanley shares were up 3.2% to 90.50. So Morgan Stanley doubled its dividend, which is phenomenal. Next, we have Wells Fargo, which, if you guys remember, a really long time ago, a while back, I actually owned Wells Fargo at 52 cents a share. So I cut them when they cut their dividend down to 10 cents. So Wells Fargo also doubled its dividend to 20 cents per share, and it said it planned to buy back $18 billion of stock in the coming 12 months, but the new Wells Fargo dividend would be below Goldberg's estimate of 25 cents and remains well below the bank's previous dividend of 51 cents. Sorry, it was at 51 cents a share. Before it was slashed last year, Wells Fargo, like many big banks, is emphasizing share repurchases between buybacks and dividends. Wells Fargo could return about 10% of its current market value to holders in the next year. Its shares were up 0.8% in pre-market trading on Tuesday. The banks were asked by the Federal Reserve to hold off on making announcements about their dividend and buybacks until 4:30 p.m. on Monday. Goldman Sachs, which has produced record results in recent quarters, sharply boosted its payout by 60% to $2 a share per quarter from 125. So a nice 75-cent boost there, matching Goldberg's projection. Goldman shares will yield 2.2% based on their closing price on Monday and had rose 1.4% pre-market trading on Tuesday. The industry leader, J.P. Morgan and Chase, JPM, as expected, increased its dividend to $1 a share per quarter from 90 cents. At $154, its shares yield about 2.6%. Its stock was off 0.01% at $154.24 in pre-market trading on Tuesday. Then Bank of America said it planned to lift its quarterly payout by 17% to 21 cents a share. In line with expectations, its shares will yield 2% based on its closing price on Monday. And then Citigroup said it looked forward to continuing with their planned capital allocation, including their common dividends of at least 51 cents per share. Its current payout is 51 cents. The analyst expectation for the new dividend of about 54 cents. So its stock dropped because it didn't, with the other banks, it did not raise its dividend. But to be fair, it didn't cut the dividend either. So honestly, out of all of these banks, the best news is definitely Morgan Stanley. Wells Fargo is still underwhelming because they're so far from where they used to be. Goldman Sachs is a great boost, and Bank of America is a great boost. Citigroup didn't do anything, but honestly, guys, out of all the banks, Morgan Stanley is by far my favorite. But congratulations to bank shareholders. Like, if you own any of the big, like, five, you got good news. I mean, I know Morgan Stanley and Wells Fargo kind of led the pack. Well, to be honest with you, I kind of feel like Goldman Sachs should have been up there instead of Wells Fargo because they had good news, but they had a really good increase, as did Morgan Stanley. Wells Fargo was still underwhelming, in my opinion. But let me know what big banks you guys own and how pumped you are about these dividend increases. So if you own big banks, you like this news. Like I said, in my opinion, I think Morgan Stanley, price-wise and dividend-wise, when it comes to news, is by far the most impressive. I'm just out of favor with Wells Fargo because of that dividend cut, I think, a year back. Um, but congratulations to bank shareholders, and let me know what banks you guys hold. I might be buying some Morgan Stanley. I might switch it out for Travelers. We'll see. Thank you guys so much for watching. Hopefully you guys are excited about the dividend increases. And I'll see you guys soon with another stock market update. Take care, guys.